Most policymakers are projecting 2 additional quarter-point increases this year. Joining us now is former Federal Reserve Board Governor Dan Tarullo, now professor at Harvard Law School. How much attention should Wall Street pay to the dot plot and the 2 rate forecasts higher that we got in the median?
Well, Sarah, I know you've always been kind of skeptical of the utility of the dot plots.
Well, they're wrong. They're always wrong, and it's confusing.
Well, that's one thing. They're not especially accurate, and nobody's forecasts are when you go out more than a few quarters. But another thing about the dot plots is that they're often used, I think, as signaling devices, and that's exactly what was happening yesterday. I mean, this rather curious outcome of the Fed's meeting, where they had a moderately hawkish statement, but a pause in the action. And then was supposed to be a very hawkish set of SEP projections. And I think, if you're trying to reconcile those, you can say, well, maybe there's a policy reason for it, or maybe there's an institutional reason for it, or some combination of the two. On the policy side...
I want you to dig into that, because you've been inside the room. I don't know what that means. Maybe there's an institution, because I do think a lot of people are left scratching their heads this morning about why they paused if they think that they have more work to do.
Right. So on the policy side, you might have said, look, if the data is the way most of the committee purports to be reading it, why don't they just raise rates? And then you'd say, well, is there a reason to pause from your strong policy inclination? And as I think you pointed out, there's not much data coming in of the regular data series, so that really can't be the reason. Is there concern about what's going on in the banking sector? I guess that's a possibility, but again, it doesn't seem as though the next 6 weeks is necessarily going to tell you that much. So that pushes us, I think, more towards what I call an institutional explanation, which is, I think this may have been a way of holding the committee together, for Jay Powell to hold the committee together by saying, okay, there are some members of the committee who think we've gone maybe almost far enough and are a little bit nervous about the pace of increases. There are others who think, there's a lot more work to be done. Maybe we can square that circle by having a pause, but indicating that, no, we don't think the work is done yet. But it became, I think, a difficult communications issue, both before and after the meeting.
Totally agree. And that your thesis there, I mean, the compromise, which I mentioned earlier, it explains why you got an unanimous vote. When just 3 weeks ago, you had voting members like Lori Logan, Governor Chris Waller, not seeming like they were in the mood to pause.
Exactly. I mean, it does. I think we've been seeing the hints of the pause for some time now. And I think they basically got themselves in a position, and maybe they didn't mind being there, but they were basically in a position where if they hadn't paused yesterday, it would have really raised questions about what Governor Jefferson was saying, what Chair Powell was saying a few weeks ago. So they would have had a credibility issue there as well.
So the question is, with the sort of confusing, awkward messaging here, what should the expectation be for the rest of the year? Because, as you say, they signaled more to come in the dots, but then you kind of didn't get that message from Fed Chair Powell. He was more dovish than the forecasts.
Yeah, I think he was trying to walk down the middle. That was the impression that I had. And I think he was accurately reflecting the fact that you can kind of read into the data what you want to read into the data. The jobs report, you could see hours worked were down, whereas job creation was still strong. You could, in the inflation report, you can say, well, headline is still down, core, though, is still not moving that much. And so I think what he was trying to do was to preserve the Fed's optionality. Having said that, Sarah, if they don't raise in July, it's going to get everybody who's on your show speculating that the increases are over and turning their attention to when is there going to be a cut. And to the degree that the committee is worried about that, and they don't want to get in the position where the speculation is when you're going to cut, I think there's going to be a fair amount of internally generated pressure on them to go ahead with one more rate increase. Whether there's a second rate increase, I think, is much more debatable.
So you're kind of in the one and done camp for now.
Well, so that reflects my policy, my policy read, which may not, I think, is not the committee's policy read. And I wouldn't say it's a done deal in July by a long shot. But, the figure that I saw tossed around by some analysts this morning of, about a 70% increase, 70% chance of an increase, that seems about right.
Dan Tarullo, really great to have you here today. Thank you very much.